Hi, everyone. Welcome into a special webinar featuring Skeena Resources. My name is Cory Fleck, host and president of the Korelin Economics Report, KE Report, and I am chatting with Paul Geddes, Skeena Resources Vice President of Exploration and Resource Development. Paul and I are going to focus on the upcoming drill program that Skeena is undertaking at their Eskay Creek property. Also, we'll discuss the drilling that'll happen at the Snip property. Just to bring everybody up to speed, Eskay Creek is planned to have about a $40 to $45 million budget this year to continue to, I think, de-risk the project. And also, it will have a bit of an exploration focus. And that's why I wanted to bring Paul on for this webinar. We're going to go through a lot of maps, a lot of cross sections to help everybody get up to speed and really know what to look for as the company starts drilling and as we see results pretty much through the rest of this year. Paul, I'm going to pass it over to you. I will interject some questions here and there. If anybody has any questions after watching this webinar, you can always email me, fleck@kereport.com, and I will get those answered by Paul and the rest of the team over at Skeena Resources. Paul, take it away, please.
Thanks so much, Cory. Again, great to be online with you here and to have the opportunity to actually put some visuals around for your listeners as we discuss the project. So just our usual forward-looking statements. The location, just in case anybody wasn't aware, we're up in the Golden Triangle of Northwest BC. And again, just to bring everybody up to speed on the historical production when what Eskay Creek was, is they were producing in between 1994 and 2008. Over the life of that mine, they produced 3.3 million ounces of gold and 160 million ounces of silver. Now, keep in mind, even though the background image here is our conceptual open pit and waste dump and whatnot, it was historically an underground mine. And the gold cutoff was the actual gold grade was 45 grams a ton and leveraged towards silver with 2,224 grams a ton. The cutoffs were 50 grams a ton and 30 grams a ton, respectively. So if you look at the factors here, you would wonder why the mine would ever be shut down. Well, again, they selectively high graded, and the reason because of that was largely the gold price. Again, if we look at this chart here and we see the gold price plotted from 1979 to 2008, they were only averaging $500 US an ounce gold. And then ultimately in 2006, because they didn't have a crystal ball and they couldn't forecast, they unfortunately missed the window. And it'd be interesting to actually know if Eskay Creek came online a little bit later and managed to get into that larger gold price. The other thing too is, to be very clear, is that once that mine shut down, all the data was essentially buried up until 2 years ago when Skeena signed the option agreement. And if we just take a look at what we have done in December 2017, that's when we did sign the option with Barrick to acquire Eskay Creek. And then we immediately jumped in with both feet and started our phase 1 program of drilling. And that was largely just all infill, strictly infill, and we needed to collect material for metallurgical test work. And then ultimately we put out a 3.9 million ounce resource update, which was open pit constrained with a minor underground component. And then finally, in November of last year, we put out a PEA with very impressive economics at a conservative gold price of $1,300. One of the things you're going to notice that's missing here, though, is that we haven't done any exploration. We've like I said before, we jumped straight in and started doing the category conversion drilling, just the infill, so that we could de-risk the project and accelerate it to convert the inferred to the measured and the indicated for feasibility level work.
So, Paul, it was also a lot about confirming that prior work as well, right? You guys needed to make sure that the work that you did uncover was reliable to continue to move forward with this project.
That's right, exactly. We had to do a lot of due diligence on the historical data. And keep in mind those resource estimates that I just showed you were largely based on just the historical information because we hadn't repopulated the entire database with fresh drilling. So this is just a 3D quick little scan of what the mine looked like historically with all the underground development. That black line that you see there is the contact mudstone, and that would be the block model and the resources and reserves at that 30 gram per ton gold equivalent cutoff. So you can see that they just literally cherry picked the high grade coming out of that material. But if you take that entire same data set and lower the cutoff to 0.7 grams per ton, which is our resource, you can see just how much mineralization is sitting there in that open pit. And again, that equates to roughly 3.9 million ounces. The other thing too is they were preferentially mining that contact mudstone, and they weren't taking any of the mineralization that was coming out of the rhyolite. So if we take a look at our mineral resources, again, it's quite impressive in that our total global ounce count is, again, 3.9 million ounces, split between the indicated categories and the inferred, which is roughly a 1-to-1 split on a tonnage-weighted basis. Although you can see a disparity in between the indicated grade of 5.9 grams per ton gold equivalent versus the inferred grade of 3.0. This is largely just based on drill hole spacing. So we're hoping that as we increase the drill hole spacing, converting the inferred to the indicated and the measured categories, that we would actually see a bump in this grade, closer to the 6.9 grams per ton gold equivalent. You know, let's say a worst case situation, we don't manage to increase that grade, we're still looking at an overall mineral resource of 4.17 grams per ton gold equivalent.
Has any of the past drilling that you guys have done in terms of this infill drilling, has it showed this higher grade? Is that what leads you to believe that you can convert it into higher grade?
Yeah, exactly. Typically, when you go in and you perform infill, and I've had these experiences where you're in a high nugget gold environment, so it's very an unpredictable deposit. Typically, what you do when you go in and fill in between the holes is you anticipate a 20% conversion loss. Not all of your infill drill holes are going to hit. However, what we're seeing at Eskay Creek, just through the style of the mineralization and the geology, it's very continuous, it's very predictable. So to date, we're always seeing exactly what we're supposed to be seeing with respect to the tonnage and the grade, if not getting little surprises, which I've got a slide here and I'll show you that in a bit. So again, our PEA is very, very robust. You can see the numbers there. And again, this is largely based on the fact that we've got such an incredible head grade coming out of this open pit. This ranks as one of the largest grades in the world for open pit gold production. Now, the other thing too is we used a conservative gold price for our base case of $13.25 US an ounce. In the event that you were to take the current spot price, everything changes significantly. The post-tax NPV goes up to about $1 billion. Your IRR goes up to roughly 70%, and your payback period is most definitely less than a year. So it's very robust economics. And again, the reason why the IRR is so high is that we're starting right off in shallow, super high-grade mineralization. You can see here an oblique view of the block model where anything greater than 4 grams per ton is highlighted in yellow. Anything slightly below that but above cutoff is in blue. And you can see in the 21A zone, the 21E, and the 21B, we're right into the high-grade mineralization right off the bat. And hence, on our chart that we see down at the bottom, the post-tax free cash flow in year one is absolutely amazing. But as we sequence through, and you can see the pushbacks, there's year 2, 3, years 4, 5, 6, 7, and then ultimately 8. The reason why the cash flow goes down a little bit relative to the first few years is that we start mining into the rhyolite. So that's the reason for that. And the rhyolite is slightly lower grade than what we see in the contact mudstone. And we'll talk about that geology here in a second. Actually, we'll skip past this one and we'll go right into this. So one of the most important factors at Eskay Creek is you need a plumbing system. And they're what we call these synvolcanic faults. And you can see just the schematic here of how those faults are important. But if we move over and just draw a generic section through all of this, you can see on a basic substrate where you're on the sea floor, you get a period of quiescence. And this period of quiescence is where there's essentially no volcanic activity taking place, but you get deposition of sediments. And then, you let time lapse a little bit further, a couple of million years perhaps, and then you get more buildup in the volcanic pile. Okay, and then you get that next period of quiescence. This period of quiescence is particularly important because not only do we get the sedimentation of this black stuff, which is the contact mudstone, hosted right underneath which is the rhyolite. Along these synvolcanic faults, we get fluid movement. And then when they hit the cold seawater, we get precipitation of mineralization. We also get some late volcanic activity as well. But ultimately, what does happen is we get the mineralization forming along these synvolcanic faults, and they circulate and they recharge, and they also deposit all the mineralization into the contact mudstones. That's ultimately why we get such enrichment right in the contact mudstone and not necessarily as much enrichment sitting in the rhyolites below. So as an example, this material right in here would be the 21C zone. And then ultimately what would happen is the entire system ceases to exist, gets capped off by a basalt cap rock. We get a little bit of reactivation of some of these faults, and we get additional mineral. And this is how the hanging wall zone, which we talk about in our press releases, comes into play. So it occurs above the contact mudstone, which again occurs above the main rhyolite sequence. So again, what we're hoping to do is we've got a short-term goal. We want to see greater than 5 million ounces gold equivalent at greater than 5 grams per ton gold. Again, achieving that grade is going to be through the infill and bringing up the grade of the inferred mineralization. And the reason why we're proposing a target of greater than 5 million ounces is, keep in mind what I said earlier, we actually haven't done any exploration yet, apart from just doing a few drill holes that were allowed to extend and into this lower mudstone. So here you can see a second occurrence where we have our basalts on top, which I just talked about, the main contact mudstone, which hosted all the historical mineralization at Eskay Creek, and then the rhyolites. But again, with VMS sequences, you get cyclicity. So we have another mudstone, another period of quiescence. And you can see here that it's fertile. 314 grams per ton gold equivalent over 2.2 meters, flanked by another drill hole that we extended down there as well. So the idea is that we would be able to target this lower mudstone horizon and hopefully come up with a new event.
Okay, and just to remind everybody, right now in the 2019 mineral resource estimate, gold equivalent ounces right around 4 million ounces. So you're really just looking to add 1 million more gold equivalent ounces. That's right,
exactly. And I'll show you here why in this section as well, because if we look at what we just went through with the sequencing and timing of events for the mineralization, notice that I had said that we had a contact mudstone sitting way down lower. Well, what we didn't talk about earlier is if we have that period of quiescence, we should have additional mineralization through other black smokers feeding into that area, as well as along the synvolcanic faults, which is again what I just demonstrated on that previous section, showing the 314 grams over 2.21 meters. So we know this secondary horizon is fertile and it works, and then subsequently all capped off by that. So essentially, there's your 4 million ounces up top that we've already, simply snapped our fingers and come up with. The exploration factor is what sits underneath that as well. The synvolcanic faults coming through as well.
So
a lot more mineralization too. Sorry, say that again?
Have these been tested at all? These faults and the deeper target?
Not really. There's a few drill holes that were put down by Barrick. Again, a lot of the grade at the time didn't meet their cutoffs because, again, 10 grams over 10 meters would not have worked for them at the time. They needed, 45 grams per ton plus to be economic at 500 US an ounce gold. So if we just take another look at the project here, here's our PEA open pit. We're looking at the block model in gold color. You can see the rhyolite sitting here. Here's that lower mudstone, that thinner black line, dacite, and what we call the EL mudstone. EL essentially stands for even lower mudstone. This is particularly important because this is the water tower zone, which Barrick had drilled historically. But again, they weren't getting high enough grades, and they haven't expanded at all. They left it wide open. So the idea is for us to go in, and we're going to be testing the down dip on the water tower zone, as well as what's going to be interesting is where it intersects the lower mudstone, because this is, in fact, a synvolcanic fault. We take a look at that again just from a slightly different angle. The 22 zone is actually one of these feeders. It's completely hosted in the rhyolite, a little bit in the lower mudstone, and you can see there is a correlation with that even lower mudstone, right? Now keep in mind, the EL mudstone continues all the way for another 6 kilometers to the southeast portion of the property. And I've got a map that I can show everybody here in a second. So we're quite excited about the exploration potential on the entire property, not through, again, just simple infill in hopes that we would increase the grade, but also the fact that we haven't done any exploration, and everything is essentially ripe for the picking. So this is just a shot of the resources again, with the historical mine development in our PEA pit. Okay, you can see the various zones, the 21A, the 21E over on this side. Hanging wall essentially occurs over here, and then the necks and the water tower zone sitting underneath the pit as underground targets. But one of the things we've often mentioned in our press releases are the buffers around that historical mine development. Now, this is because of the option agreement that we have with Barrick. We are not allowed to drill anything within that buffer. We're not allowed to pierce it. So that's why we've been focusing on our drilling in the 21A zone, the 21E, the hanging wall, and then currently where we're going to be drilling is in the 21C zone. So again, once we exercise the option to take the property 100% off of Barrick, that buffer completely disappears, and we can essentially drill all of the inferred that we need to and move it up. So again, the 2020 program, it's just about de-risking and enhancing. The phase 1 drilling program is going to finish off outside that 25-meter development buffer, which we see here on the right-hand side. And again, the concept is to convert the inferred to the M&I, and that's about 24,000 meters. So we'll be finishing up a little bit more in the hanging wall zone, a few more in the 21E, but largely we'll be converting all of this mineralization sitting in the 21E zone as well. Okay. Now the phase 2 drilling program, as I just alluded to, will be inside that 25-meter development buffer, because again, we have to convert the mineralization that's in the M&I, that's inferred, to the M&I, and that's about a 45,000 meter program that we'll be completing. And from an engineering standpoint, we're also going to be completing a geotechnical program this summer. So we use very conservative pit slope angles and very large buffers when we calculated the open pit. But when we get new information from a proven geotechnical program, our hope is that we would be able to increase the pit wall angles and actually reduce the strip ratio.
So how long do you see both the phase 1 and phase 2 drilling lasting? You're going to try to get it all done this year. So how many drills are you going to have? What does that all look like?
That's correct. That's correct. The option expires on December 20th of 2020. So what we want to do is have all of that completed by that time and have it essentially ready to go such that we can fast track towards pre-feasibility, which is our next step. You know, it would be a shame to have to go in to PFS with inferred ounces, because again, the inferred will not convert to reserves. They have to be in the measured and the indicated categories. So again, that's Skeena's focus, to accelerate the drilling and accelerate us towards PFS. Okay. Now, this is a quite exciting slide. It's a new one. What we've done is we've designed 137,000 meters of strictly exploratory drilling. And we're looking to increase the resource base, you know, on the 4 million ounces through a combination of open pittable targets and underground targets. Again, keeping with our global idea of greater than 5 million ounces gold equivalent and greater than 5 grams per ton. Now, although this is the main mine footprint area, here you can see the open pits for the 21 zones and the 21-2 zones sitting down here. Largely all of these orange blobs, these soil anomalies, have been untested. They're very scarcely drilled. And if you go back into history and think about why, It's because back in the days of Prime, they would work on the McKay targets and basically take themselves towards the northeast until they ultimately hit hole 109 in the 109 zone at Eskay Creek. At which point, if you know you've got a bonanza gold deposit, why would you bother focusing on any of the other material that was sitting out there? As well, they didn't have the same understanding of the stratigraphy, the controls on the mineralization, the two lower mudstones. They weren't as important at the time. As well, they were looking for 45 gram ton material. So, 5, 6, 7, 8, 9, 10 gram material just didn't cut the mustard for them at the time. Ultimately, what that boils down to is the main Eskay trend, which we're very excited about. We're also going to be performing an IP survey along that trend to help us delineate some of the targets. And also this secondary trend, which is the tip-top trend, which also takes us out to the Eskay porphyry, which we know very, very little about, but it is anomalous. There's gold in soil anomalies out there, as well as you can see the grab samples up to 7.5 grams per ton gold equivalent that came out of that. Essentially no drilling. Well, essentially on this second target, there is no drilling whatsoever. So we're, again, really focused on building us towards that 5 at 5.
Okay, a couple quick questions here, Paul.
Yep.
One being, is everything permitted to go ahead with this exploration drilling? And where do you see starting this drilling? Is there going to be a general strategy, say starting in the south, moving north? What can you share with us?
With respect to permitting, so yeah, the holes have been designed. They've been approved by Barrick. And right now, as we're fast tracking them through the permitting process with the government. Having said that, our current permitted drill holes, we have more than enough to handle us here and accommodate any other delays that we might have. So we're in great shape. With respect to prioritization, not all targets are ranked equally. So what the geological team is doing right now is ranking the targets that have the best potential to produce the largest number of ounces as quickly as possible. So ultimately, it'd be nice to drill everything, but we have to take the easy pickings, shall we say, the lowest hanging fruit, and go after those immediately during this first phase. And again, it'll be a combination of near mine mineralization in that water tower zone, as well as more far field and regional. For instance, the McKay targets and the tip top, potentially even the porphyry target as well.
Okay.
We should also mention Snip. We haven't forgotten about it, even though it's been a little bit overshadowed by Eskay Creek as of late. We're planning on doing about $2.5 million in exploration, which equates to about a 5,000 meter surface drill program. And the idea is to expand on that new 200 footwall corridor. This is an image from a press release we put out last year, where we had a 1997 drill hole that was drilled by Caminco back in the day, or Homestake rather, underground 2610. So it had basically 27 grams per ton gold over 3.5 meters. There were no other drill holes that had followed up in that area. So what we elected to do was to, twin it and expand it and see if we could confirm that mineralization. And we ended up with 7.5 over 0.6. But most importantly, we let the drill hole go, and we managed to hit the biotite spotted unit in this 200 footwall corridor. And it's pretty impressive, 1,100 grams per ton gold over 1.5 meters. Unfortunately, this other drill hole that we'd put in, we had drilled first, and we didn't let it go deep enough. So the idea is that when we return to the Snip drill program, we'll be extending this drill hole down to intersect the 200 footwall, as well as probably expanding upon it. So again, the ultimate thing here is not to do any infill, but to expand the current resource base at Snip and enhance it. So again, if we just take a look at our summary slide over our 2020 outlook, it's category conversion drilling, because we really want to rapidly advance to the PFS, which is going to be due in 2021. Again, that large-scale exploration program in the near mine, as well as the regional targets that haven't been tested. Our global target for Eskay Creek right now, the short term, is 5 million ounces at 5 grams per ton, and we're anticipating a $45 million 2020 drilling budget at Eskay Creek and another $2.5 million at Snip.
So
ultimately, that's what we wanted to update you with. If anybody has any questions or comments, they can always get a hold of Kelly Earl.
And you can also email me, fleck@kereport.com. Just a quick comment there, too. The $45 million program plus the other couple million at Snip. You guys are fully funded for all of this, correct?
That is correct.
Okay. Yes, again, if anybody has any follow-up questions or they want a little bit more information on either project or a little bit more details on that drilling, feel free to email Kelly at that information there, info@skeenaresources.com, or myself, fleck@kereport.com. We're going to keep up to date on this story as it progresses, and overall what should be a more exciting year for Skeena because of this exploration component that you guys really haven't had the chance to explore over the last couple of years. This can drive stocks, especially if you can make whole new discoveries. But either way, the economics of this project are very interesting, and the stock has been showing a nice upward trend over the last few months anyway. So, hey, Paul, I appreciate your update. I hope everybody found this interesting. Again, keep in touch and keep those emails coming. I will have more webinars coming out in the near future, so keep up to date with me at the KE Report. Paul, thanks again for your time.
Thanks again for having me. Take care.